Well, the situation in Greece has overshadowed other serious financial wobbles on the other side of the world. SBS FINANCE editor Ricardo Goncalves joins us now. Ricardo, it seems we're forgetting about China.
Yeah, Janice, with so much focus on Greece at the moment, it's easy to miss what's happening on the various Chinese share markets. This here is one of the biggest, the Shanghai Composite Index, and as you can see, after a couple of years of steady trade, shares surged more than 150% in just over 12 months. That surge forced many Chinese investors to look for alternative investments because some feared shares were overvalued. So many looked at offshore property for better returns, for example, hence one of the reasons why there are many Chinese property buyers in Australia. But since June 12, Chinese shares have crashed down almost 30%. They fell another 5% today. And I spoke with CommSec's Tom Petrovsky for more.
This is a factor that was talked about by Chinese regulators today. They've been making comments to try and reassure the investing public, but I think there's still a lot of disquiet about the sort of price movements that we've been seeing in recent times, and they've even spoken about moves to try and curtail short selling or to put in place curbs to try and bring some stability back to that market.
Tom, what's the market saying about which way the Greek vote will go, and what are the implications for Australian shares on Monday?
So effectively, if we see the Greeks vote yes, that means that they have to go back to the bargaining table, the Greek administration, and that is essentially what the markets would want. Under those circumstances, we'd see a reasonably orderly beginning to next week as far as trading is concerned. A no vote would certainly see a lot of volatility in the markets.
To the Australian share market now, which ended the week lower. Investors are contemplating the Greece vote and were influenced by a 5% fall in the iron ore price overnight. Unsurprisingly, the big miners lost ground. Each of the big four banks were also weaker, ANZ worst. Retail trade rose less than expected, 3.3% in May, that's according to the Bureau, and that placed pressure on stocks like Harvey Norman and Myer. Telstra was also down. Tokyo's Nikkei made moderate gains. Shares on Wall Street fell on a weaker than expected jobs report. The Australian dollar is at a near 6-year low with the US. And that comes ahead of the Reserve Bank's decision on interest rates on Tuesday. And on the commodity markets, both gold and oil are down. And that is the day in finance.
Thank you, Ricardo.